Is the AI boom a bubble waiting to burst, or the next industrial revolution? Nvidia's latest earnings report just dropped a bombshell, suggesting the latter might be closer to the truth, at least for now. But here's where it gets controversial. While Nvidia's staggering performance has calmed some fears, whispers of an AI bubble persist, leaving investors and tech enthusiasts divided. Let's dive in. Nvidia, the undisputed kingpin of the AI hardware race, has once again shattered expectations. The company's sales of AI-powered computing chips soared past even the most optimistic forecasts, delivering a performance that could ease recent jitters about the tech sector's sustainability. Think of it as a pulse check on the AI frenzy, a frenzy that's been driving both the stock market and the broader economy since OpenAI's ChatGPT took the world by storm 3 years ago. Why Nvidia? Because its processors are the backbone of AI factories, the infrastructure needed to power what many believe is the most transformative technological shift since the iPhone's debut in 2007. But this is the part most people miss. Nvidia's dominance isn't just about hardware. It's about being at the epicenter of a technological revolution that's reshaping industries, economies, and even geopolitics. But here's the kicker. Despite Nvidia's record-breaking earnings, $31.9 billion, up 65% year-over-year, with revenue climbing 62% to $57 billion, skeptics argue the AI hype might be overblown. In recent weeks, a growing chorus has warned that sky-high expectations could set the stage for a dramatic come-down. After all, Nvidia's market value has skyrocketed from under $400 billion 3 years ago to a staggering $4.5 trillion today. That's a lot of pressure to sustain. So, is this a bubble or a boom? Nvidia's fiscal third-quarter report, covering August to October, seems to have breathed a sigh of relief into the market. The company's stock surged over 5% in after-hours trading, potentially adding $250 billion in shareholder wealth overnight. Even more impressive, Nvidia predicts its current quarter revenue will hit $65 billion, nearly $3 billion above analyst estimates. CEO Jensen Huang calls it a virtuous cycle, with demand for its Blackwell chip described as off the charts. But let's pause for a moment. Are we too quick to crown Nvidia as invincible? While its CFO, Colette Kress, predicts $500 billion in chip sales by next year and trillions more by the end of the decade, the company isn't without challenges. The US-China trade war, for instance, has limited Nvidia's access to China's massive market. And then there's the question of whether AI's growth can sustain this pace without hitting a wall. Here's where it gets even more intriguing. Nvidia's success isn't just a tech story, it's a political one. CEO Jensen Huang has cultivated close ties with former President Donald Trump, who's increasingly leaning on AI to drive his economic agenda. But is this a match made in heaven, or a risky alliance? Trump's tariffs, while aimed at boosting domestic investment, have inadvertently funneled capital into AI data centers and power facilities, further fueling Nvidia's rise. And this is the part most people miss. Nvidia's boom isn't happening in isolation. Big tech giants like Apple, Microsoft, Google, and Amazon are riding the same wave, with market values ranging from $2 trillion to $4 trillion. As OpenAI and others scramble to build AI factories, Nvidia's chips have become the currency of the future. But at what cost? Are we building a sustainable ecosystem, or are we inflating a bubble that could pop at any moment? Here's the million-dollar question. Is Nvidia's success a sign of AI's unstoppable momentum, or a warning sign of irrational exuberance? Jay Woods of Freedom Capital Markets calls Nvidia the most important stock in the world, but even he admits the stakes are sky-high. As investors cheer Nvidia's latest triumph, skeptics are already eyeing the exit. So, what do you think? Is the AI boom here to stay, or are we on the brink of a bust? Let's debate in the comments, because this is one conversation that's just getting started.